Today in the studio, folks, as always, I got a real treat. Dave Allred in the house. What's cracking?
Let's do this. Ready to drop some bombs.
If you guys don't follow this dude, you can follow him at Dave Allred, just like it sounds, all red. He's all red, but his portfolio is all in black. You making money, ain't you?
Let's go.
He's the managing partner at Axia Partners. He's an entrepreneur. He's a sales leader, 17 years of sales experience. Majorly experienced in raising capital, buying real estate, development. I don't know if I'll read all that, but dude, you're well versed as an entrepreneur and a businessman. You just mentioned you're opening a Topgolf in Utah.
Yeah, it's been a journey. You know, I jumped into summer sales. It's supposed to be 4 months going out and knocking doors. Ended up turning into a 17-year, sales leadership career. And man, we could talk for an hour on that topic, but it's that was the hardest thing I've ever done, man. Going out there knocking doors, had no experience in sales whatsoever.
How old were you?
I was 21 when I went out.
And what were you selling?
Home security systems.
Vivint
Smart Home. You got it.
Vivint Smart Home. Boy, Vivint was the boot camp for a lot of people, sounds like.
It really was. It's there's been hundreds of door-to-door sales companies that have come out of Utah, and very, very few of them have actually had longevity and survived through the years. And I'd say Vivint's been the juggernaut for sure. Most market share, sold for multi-billion valuation. Actually kicked out sister company Vivint Solar, which I went out to California, helped run the California market for them as well. They had a multi-billion exit as well. So it's been fun to see that progression, man. When I came over to start with Vivint, they had 800 accounts, produced in the entire year. And now to see it be the number 2 largest provider in the country.
It's crazy. Is Todd Peterson the founder of that?
He is.
Yeah. So I heard something, I don't know if it was true, but like there's some sort of, not conspiracy, more like shady shit. Like, was there a thing about Vivint recently or no?
No, not that I know.
I said something about Todd Peterson, he built a company, and they said, yeah, but he's in trouble for something.
That's the first time I've heard of that, man. So we
bullshit.
Yeah, we had Goldman Sachs come in as an equity partner back in 2010. I want to say
it's probably
bullshit. And then Blackstone came in and replaced them as well. So they're actually our largest partner today.
Oh well, then there ain't nothing funny going on with those two.
I've never heard that before. I would say Todd's been a huge mentor for me, man, and actually a role model in business.
Well, you know how people talk shit when you're freaking killing the game.
Always. If you don't have haters, you're not playing big enough, right?
That's what I say. And unfortunately, the higher you fly, the bigger of caliber they need to bring you down. So a lot of shit happens. The higher you get, the more serious the shit.
100%.
So, but dude, you're definitely on your way up, but you seem very chill and laid back about it. Like, you're running around doing, I've seen you on stages doing keynotes. What are you talking about?
Yeah. So it's been fun, man. I've always had a lot of intentionality with what I really want in my life. And, for me, knocking doors and, summer sales was just a way to get there a lot faster, right? To take that active income and make a lot of active income and then turn into passive income to be able to eventually have the freedom to be able to do whatever I want to do in my life. And, at my core, I'd say my biggest motivator I've learned about myself is freedom. Like, I just want a shit ton of freedom, man. And it's freedom to do what I want to be doing in my life with the people I want to be doing it with when I want to be doing it. And to me, that's what life's all about, right? It's being proactive. You're in the driver's seat. And so what I'm doing today is I do a lot of, speaking engagements across the country, speak on real estate. Next week I've got 3 speaking engagements across the country. And it's just speaking on, embracing doing hard things and embracing the grind and really learning to become comfortable being uncomfortable and in that pursuit of financial freedom. And, frankly, it's not just financial freedom, it's really time freedom, which I think is actually more important than financial freedom in the first place. But what am I doing? Just investing in a lot of different opportunities. I launched a real estate fund called the Axia Partners Fund. Really excited about that. We launched our first fund last year. It went really, really well. We're on our second fund right now.
How many partners are in that deal?
We have 5 managing partners, and then we have about 150 investors in our first fund. We doubled the size of Fund 2, so we anticipate closer to 300 to 400 investors this time.
Nice. And you just do that by telling people how much money you're making. It's all real estate based?
Actually, so the investment thesis is it's recession resilient commercial real estate, right? So we do self-storage, apartments, and so self-storage, RV parks, and apartment complexes, because all three of those have been proven to be historically very recession resilient. And so, we're 12, 13 years into this incredible housing market. And so the whole idea is, how do we mitigate downside risk while still creating strong upside yield for our investors? And so that's why we approach those assets. And frankly, that's what I've personally been investing in. It's what I really believe is the best opportunities right now in real estate. And so that's really our approach. In terms of our investors, it's actually, Brad, it's actually all our social network. I've never paid for a lead. I've never paid for an ad. It's just, reputation. It's a lot of repeat investors over the last 15 years that I've been doing syndications and raising capital. And, a lot of people are like, Dave, doesn't that stress you out that you've got like your friends, your brother, your family coming into these deals? I would say, it's just a mindset. And really it's, why would I not want the people that I care about and that I love to be able to come in on these deals that I'm passionate about and I believe in? And if I really want to create value for people, why would I want to bring in, some institutional money or a private lender or a credit union when I could create value for my friends? So it's all social network.
Now, a couple of your partners I know, Aaron Wagner, I've met Kent before, Kent Clothier. Who else is there?
We also have Jeremy Long and Adam McClellan, Daryl Doucette, and Jeremy Long. So
yeah, I've never met those guys, but Aaron's a cool sumbitch.
He's awesome. He's been a great partner.
He's made some dough. Seems like everything he touches turns to gold.
He's just a visionary, man. He's he's always go. I think
Kent's a stud as well.
Kent's incredible, right?
So I don't see how you can fail with like 5 badass partners.
What's fun about that is I always say, who you do business with is who you do life with, naturally, right? Because there's that proximity and that time you spend together.
Ideally. A lot of people don't know that little hack. A lot of people say friends and business don't mix. I say bullshit. I say you're doing it wrong, Ben.
100% disagree.
Or you got the wrong friends.
Yeah, exactly right. To me, the best place you can get to is where you're working with your friends and it blurs the line between when you're actually working and hanging out, right? Yeah. It's just that natural synergy and that collaboration and just like-minded people trying to create real impact and change the world and win, So I've been very grateful and I feel very blessed for the partnerships that we have.
Why the name Axia?
So great question. So Axia, I've always been, so Axia, the Greek meaning for that is to add value. And one of my biggest goals in my own personal life has always been to create massive value, right? I want to create value for 10 million people directly. I want to, help 1,000 people become real estate multimillionaires and my family foundation, et cetera. But I've always lived around the concept of, well, actually, the best way to say this is my all-time favorite quote is from Zig Ziglar, and he says, "You can have everything you want in life if you help enough other people get what they want." And I realized a long time ago that's very true. And and not only it just reciprocates, man. You create value for people, and it usually comes back 2 to 3-fold. And
Facts.
So, and even in our approach in real estate, it's always about adding value, right? We don't just buy an asset and hold on to it, as a long-term hold. We buy the asset, we go and we make improvements to it. We, and value add usually means, putting in new granite countertops, new paint, some amenities. We do all of that stuff, but it's also it's a lot more innovative with putting in, working on search engine optimization, social media presence, working on, putting in dog parks, putting in WeWork shared office space, which is really important nowadays, right, with COVID and everything. And so it's just being a little more innovative in our approach and our strategy. But that's why. Value add.
So how did you meet all these guys? Were you just all hanging around Utah or what?
So Aaron has probably done more real estate deals in Utah County than anybody else, at least that I know. I personally, I started out doing townhomes, then a bunch of fourplexes, and then worked up into, smaller multifamily deals, then into syndications, and then development projects, and then the fund. One of my goals in life has always been to do bigger deals than yesterday. It's just a natural progression, right? As you do bigger and bigger deals, you get that, you're going to get personal development, personal growth, hopefully more yield, create value for more and more people as you bring them into deals.
Are all the deals roughly the same, small or big, when you break it down to the bones?
No, I wouldn't say that.
Like because I'm going to start getting into real estate. I
should.
Grant wants me in his fund, which I gave him a little money to get him off my ass. But, I'd throw you guys a little money, but that's not to me getting into real estate. That's me investing.
Yeah.
Hey, these guys are in real estate. Let me make some money on my money rather than just have it sit there. That's smart. So anybody listening, Axia partners, they'll make you more money than whatever your money's doing now, more than likely. But that's to me an investment. I want to learn real estate. I want to go do what you did. So every time I start looking, okay, let me get a fourplex. Where do you go? How do you know if it's a good deal? What inspections do you need? Like how do you not get ripped?
So 3 things. First of all, I listened to that podcast with Grant Cardone that you guys did. Awesome podcast. And at the end, he kind of called you. I was like, hey, you got to take action today. So Brad, I'm going to say, hey, let's do that today, brother. Let's jump on that. Would love to have you come in on it. But the second thing I was going to say is, with real estate, it can be very daunting. It's like this, commercial real estate, pretty much everybody wants exposure to real estate. And I would say that I think that real estate is the best way to create generational wealth. And it's the best way to hedge against inflation. Everybody's talking about inflation today. And what I love about real estate, man, is, and Grant talked about this on your podcast, but in an inflationary environment, he actually thanked, Mr. Biden for creating almost 2 trillion, anyway, 40% of all the dollars in circulation have been printed in the last 2 years. And so in inflationary environments, real estate is such an incredible asset because market values historically go up with inflation, but also market rents go up at the same time. But your debt service each month is usually locked in with a fixed interest rate. And so you're actually winning on all 3 different, it's like a 3-pronged approach to winning in real estate.
Yeah.
But secondly, is just, even going through COVID, I saw a lot of exposure in the stock market, multiple 7 figures there, even though I was trying to divest out of the stock market. I got to say, Brad, I lost more sleep during COVID on the stock market holdings. I had anxiety. I was worried about, losing there. Whereas on my real estate portfolio, I slept like a baby. Like I never had any worries with that at all. And I really just, it's a great way to be able to create not just wealth, but to me, the best part about real estate is the fact that it creates cash flow. And I'm a cash flow investor. Frankly speaking, I care more about my monthly cash flow than I do about my net worth or equity in my deals. That mailbox money just, consistently coming in. To me, that creates so much more freedom in my life, knowing my family's taken care of. I can be wherever I want to be, doing whatever I want to be doing, and we're going to be good to go.
Money pays.
Yeah. So, and then the last thing I just want to say, our motto at Axia Partners is experiential investing. And I love this. I came up with it a few years ago. And what that means is we are committed to educating our investors on how we do what we do. And I've never seen another real estate fund do this before, but we literally pull back the curtain and we show you exactly how we do what we do. So when we go and we do a site visit, we actually invite all of our partners to come walk the site with us. When we close on a deal, we'll go through and show how we source the deal, the underwriting model. We actually show our partners the entire model on how we underwrote the deal, our value-add business plan, our disposition business plan, all of it. And so that's been received very, very well. We have a monthly webinar with the top real estate guys in the country coming on for an hour and a half just to create value for our investors every month. And there are a bunch of guys that all the names, the guys jumping on these podcasts or these webinars, but that's been received really well, man, because everybody, in my opinion, everybody wants to be doing these type of deals. It's just either a lack of confidence or competence.
Or cash.
Because
a lot of people that have the money to throw into these things, they have things they're doing. So they don't have time. Like I don't have time to go look at buildings and run them down and all the shit that I'm imagining goes into these things.
Well, that's probably the best part about, jumping into a fund, like ours or Cardone Capital, or there's hundreds of them, is it's completely passive. And so if you want to be on the webinars, you want to learn and have that educational and experiential side of it, that's up to you. Otherwise, all it is do your due diligence, send in a wire, and then once a year, push your K-1 tax form to your CPA. And that's literally it, right? We do all the heavy lifting. It's completely passive, so there is no time requirement.
What kind of ROI are your investors experiencing annually?
Because it's a 506C offering, we can't publicly advertise or publicly solicit for capital. We have to have a relationship with the investor. And so So usually it's, the next step is to sit down and have a quick conversation or a quick phone call, get to know what the investment objectives are and go from there. So I actually can't talk about like the exact IRRs.
What if someone listening wants to invest or at least look into it? Where do they get a hold of you?
Great question. Just jump on axiapartners.com or on Instagram, Dave Allred. Reach out to me. I'm happy to help out with that as well.
Tell him the Bomb Squad sent you so he knows I got some influence, folks.
There you go. What I would say is, we're overperforming significantly on our first fund.
Yeah.
And that's really helped create a lot of momentum going forward into this next fund.
Now, is it just real estate, or because I know Aaron's got a bunch of franchises like chicken joints, cool locations. The Mas Por Favor's badass.
Have you been in Mas Por Favor?
Yeah.
Yeah, right here in Vegas.
Yeah, so is that Axia Partners doing those, or is that something else?
I'm an owner in that with Aaron, as well as, now 62 different restaurant concepts, and they're all very experiential. Frankly speaking, everything that I'm doing in my investments right now in my life is experiential. I feel like experiences are the new economy. And whether you're a millennial or a baby boomer, people want to pay for experiences, and they're willing to pay for it. And so, the fund is very experiential. The restaurants are experiential. Topgolf doesn't get any more experiential than that, right? Everything is a focus on creating experiences for our partners. Going back to your question, all of those are actually outside of Axia, and Axia is strictly a real estate firm focused on recession resilient commercial real estate. Any
hotels? Anything besides just are you multifamily?
So in Florida, we're doing a hotel conversion. So it's an old hotel from it's actually a 100-year-old hotel. We're converting over into 72 high-end Class A apartment units, and then in Palm Springs, California, we just finished up a $12.5 million offering with the Montage Hotel brand and the Pendry Hotel brand, and a 19-hole Arnold Palmer golf course around it. And so we helped come in as a development partner on that as well. But that was as an SPV, so a special purpose vehicle outside of the Axia fund, but it was an Axia offering.
So if someone's listening to this and they're saying, "Well, I want to do it myself," like how hard is it actually?
So,
because if Grant Cardone can do it,
yeah,
pretty much anyone can.
It can't be that hard, right?
Can't be that hard.
I would say this. I'd say the key decision there should be: am I willing to be an active investor or a passive investor? Because most people, when they get started in real estate, they want passive income. They want to be passive, but they end up being more active, meaning they're dealing with evictions, they're dealing with broken toilets, they're dealing with screening tenants and all that kind of.
Just hire management for that.
Yes, but even then, you're usually going to be managing the property management company, especially on single family homes, because there's not a lot of money and profit in that business model. And so, I don't know, man. I haven't had a really good experience with single family homes. My advice would be is to go into multifamily as fast as you can.
What's the minimum? Duplex.
Duplex, yeah. I love fourplexes. I bought 27 fourplexes.
Where do you find them?
So, just all over the place. Actually, let me rephrase that. I only invest in markets with the following criteria, and it's the same thing for Axia Partners. We only go into markets where there's a positive net migration, meaning people are moving into those markets. We actually study the U-Haul data, and every quarter we can see where people are moving into, right? As an example, right now, if you rent a U-Haul from San Francisco going to Austin, Texas, it's 4 times more expensive than it is to go from Austin, Texas to San Francisco because of just that migration pattern, right? So I only go to net positive migration states. We only go to red states, and it's not really a political thing, but we can't control if there's going to be eviction moratoriums or rent control and all that shit. That messes up a pro forma very quickly, right? And we can't control that, and so we only go to red states. And there's a few other factors as well, but we love, Texas, we love Florida, the Carolinas, Tennessee, Georgia, Utah, Idaho, Arizona, and Nevada. Those are our top 10 states right now. Well, it's kind of like Wayne Gretzky says, it's not about being where the puck is. You want to be where the puck's going to be. And as long as there's going to be a lot of migration coming in, there's always going to be a strong demand for these assets.
Okay, so net migration, people are moving in. It's a red state. What was the third one?
Third one is value add. It's meaning that, it's a little bit outdated. It needs some love, needs some attention. And what that means, Brad, is we can come in there and strategically add value to the asset and increase the NOI, or the net operating income. And therefore, we've created so much value in the property that even if the market turns down, or there's a recession, a correction, choppy waters, whatever that looks like, we've got so much equity in that deal. We've kind of insulated ourselves in that we've mitigated the downside risk on the deal.
Yeah. How many deals do you think are out there sitting just undiscovered?
So many.
Because I always tell my listeners, listen, if you got real estate deals, shoot them to me.
Yeah.
And they're starting to shoot them to me. And I'm creating partnerships where I can just flip it to this person, because you know that there's hidden gems everywhere. You just, maybe somebody's uncle owned a apartment building and he died, and, they don't know what to do with it, stuff like that. Like, how do you find them?
So a lot of that is just putting it out there, right? So the fact that you have this microphone and this audience and this, you're a thought leader here, you putting that out there and on your social media, hey, I'm looking for real estate deals and partnerships and JV opportunities. I think that's going to attract a ton of opportunities to you. That's the first thing I would say. Secondly is understanding that once something hits the market and it's listed by an agent or a broker, you're going to be paying a premium compared to what you could pay for that by finding it off market. So we really try to find off market deals as much as possible. And
off market just simply means someone hasn't decided to sell it and list it. You found them and talked them into it.
That's right. You got it.
Well, wouldn't an average person see what the market value is and be at the same rate?
You'd be surprised. A lot of the best deals we've found are in these very fragmented industries, such as RV parks, as an example. Most RV parks are mom and pop operators. We've closed on 2 last year, and we got the most amazing price point. So our basis is so cheap in the deal, and they're, it's a 70, 80-year-old operator. They're just tired of it. They want to move, back to their grandkids and enjoy quality of life. And they just haven't done anything to improve the asset for years, and they don't really care anymore, right? They're comfortable, or they have no debt on it, and they're just comfortable with the cash flow coming in. And so you get in front of those individuals and just, always make sure it's structured as a win-win situation. You don't want to take advantage of it, but at the same time, you'd be surprised how many people aren't fully aware of how crazy the market's been in the last few years.
How many units in a plex can there be before it's an apartment building? Great
question. So residential is 1 through 4 units, and then anything 5 units or higher is considered commercial. And so a 5-plex would be a commercial multifamily asset. A 4-plex is a residential multifamily property.
Now, terms are different on those two, right?
Yeah. And so let me share real quick why I love the 4-plex is, especially earlier on. Like right now, I've kind of, maybe evolved past the 4-plex, but what I love about it is you get residential financing, right? And if it's your first time buying a property or getting a mortgage, you can get an FHA loan with 3.5% down payment, right? Say it's $1 million 4-plex, you're only paying $35,000 to go and acquire an entire 4-plex. You have 4 streams of income. If you're living in the asset, even better. And so you have 3 other people basically paying for your debt service on your 4-plex. But if you have 4 people there, one moves out, there's a vacancy. Instead of being, not only no cash flow, but negative cash flowing on a single family home, you now have 3 streams of other income coming in that helps mitigate the downside risk. And then just, scale, economy of scale. Instead of paying a property management company 10%, you can usually negotiate that down to, 5, 6, 7% because there's 4 units. It's a lot easier for them. Your landscaping, your insurance, everything is just simpler. You know?
But whenever I think about, okay, let's do that one. How do you know, shit, the frickin' plumbing's rusted, or damn, the roof was going to cave in and I didn't see it? Like, you have to get inspections or something, don't you?
Yeah, definitely get an inspection done before you buy any property. That's definitely a best practice. A lot of the 4-plexes that I've done have actually been brand new development. So, we'll just basically find some land and actually develop the entire unit.
Well, that was my next question. Why wouldn't you just build it?
The only downside there is, well, there's pros and cons to it. The downside that I see is you're taking on debt and you don't have any positive cash flow for maybe a year to 2 years while they're going through the construction process and stabilizing the asset with tenants. And so during that 2-year period, if there's a big downturn in the market, then you actually get stuck with a debt payment. So it's actually a liability instead of being an asset. And everybody that I know that really got smoked back in 2008, 9, 2010 was because they had a large debt payment or debt service, right, mortgage payment, without having positive cash flow. And so, but if you have the liquidity to weather that storm, that liquidity, then it makes a lot of sense. And I think that's a great way of approaching it. Frankly speaking, right now, the market's been it's pretty frothy and it's so high right now. You can actually, replacement costs to go and build brand new can be even cheaper than it is to find something that's actually stabilized today, which is pretty crazy, right? But that's just where the market is right now. So there's no downside besides the risk of no cash flow. And then, that's really the biggest risk that I see.
So you started out in sales, door to door, 21 years old. You knocked for 17 years. Were you making some good loot?
Yeah, my first year I made, $31,000, which for me at that time, I come from a very, 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 poor home growing up. And so that was more than, my parents had ever made. And I was actually stoked about it, man. I came back, went to college the next year, bought an Isuzu Rodeo with the chrome rim package on it, balling, I just thought that was awesome. And then it came back and that first year was so hard, man. I've done a lot of hard things in my life, but that was by far the hardest thing I'd ever done in my life. Thought about quitting every single day, repeatedly. I was failing. The first week I sold one account. My first month, 16 accounts. Midway through the year, summer, I was on track to make no money, but I was able to finish really, really strong. Sold 121 accounts, made $31,000. Came back next year as a sales manager, made $156,000.
Well, hold on. What do you think the shift was?
The shit, I can tell you very clearly. When one of the regional managers came out midsummer and talked about how the company wanted to scale and have a lot of new sales managers the following year, but you had to have at least 100 funded accounts to be able to qualify to become a sales leader. And I always wanted to become a great leader. And I saw that opportunity to be able to not just make more money for me personally, but be able to lead other people and create something with more longevity and create value for a lot of people. That really fired me up, man. So I doubled down, recommitted, finished the summer really, really strong, and finished on a high note because of that inspiration and that goal to become a sales manager. And I knew that as a manager, I'd be responsible for inspiring and teaching other people. So I need to figure it out on my own.
So theoretically, if they didn't offer that, you might have quit.
Brad, if I had that changed that one meeting. Changed my entire trajectory of my life. Honestly, man, if I had quit, which 80% of the team did quit, it was a shitty summer, man. It was a tough situation out there. If I would have quit, who knows where my life would have gone, man. I wouldn't have come back there's no way I would have came back the next year, right? And I would have just started over trying to build something different. I wanted to be a professional firefighter or an international businessman. Those were my two kind of goals where I thought I wanted to go. Instead, I was able to finish strong. Came back the next year as a top first-year manager in the company, made $156,000. Then I created 4 new teams. Next year, I came back, made $250,000. Next year, $560,000. Anyway, just kind of built it from there. It turned into this amazing, incredible leadership journey with 121 sales teams in 41 states.
Wow. So I like to point out to people, how do you get out of the rat race? What's the rat race? That's when you're paycheck to paycheck or not far from it. I always tell people, step one, you got to sell something. You got to sell something. Why? Well, because you can't be at a salary somewhere and get out of the rat race. Usually. There's always exceptions, but the main thing is like a salary is not going to cut it. You need commission, number one, so you got to sell something. And the goal of shifting into a commission only is raising the limitations of salaries and shit like that. But more importantly, so you can get a lump sum of money. Like when you were doing $500,000 a year, $250,000 a year, you had enough left over to actually go out and find something to invest in. Is it possible for people that are making 60, 80, 90 grand a year to save up enough dough to buy and start getting into real estate and develop it into massive amounts of shit?
It is. It just takes a lot more time, right? It's going to be a lot longer of a process there for sure.
Isn't it easier just to start making a whole lot more money and then socking it away?
100%, right? I think the key, the mindset though, is making sure they understand that, like you said, saving money to get ahead or to get wealthy. To me, that's old school. Like that doesn't really work anymore, especially in such an inflationary environment. People sitting on their money, they're literally losing. They say 8.5% right now with inflation. I'd say it's closer to mid-teens, probably double that in real inflation. So that's gone. You've got to make sure your money's working for you. When you're sleeping at night, it's making more money for you, right? That really is the key, that mailbox money, that recurring passive income. But you have to be able to have, like say, fortune favors the bold. It's scary to part ways with your capital, especially if you don't have a lot of it, and put it into an investment. Anytime you depart from your capital, there is an inherent level of risk with that, right? And so what I always say though, is when you first get started, if you don't have a lot of money, the best investment is the 6 inches of real estate between your ears. Like that you will get the best ROI long-term based on that investment right there. I was hanging out with Andy Frisell and Ed Milet last year, and we were at a steakhouse, and they made a really important comment. He's like, hey, where you're going to be 12 months from now compared to today is simply 3 things. It's going to change that. It's going to affect it. 1 is the people you surround yourself with. 2 is the books that you read. And 3 are the podcasts you listen to. And when Ed said that, I was like, yeah, it's pretty basic. I get that. But the more I looked back and thought about that comment, it's very powerful, man. Like that really is what, changes our mindset and who we are in the future. It's what we absorb and what we take in. But just kind of circle back on answering your question. I think that, if you're only making, 50 to 100 grand a year, the key is just get in the game, but start by investing in yourself. It's going to take a lot of time. I would challenge your listeners to really focus on increasing your earnings though. And you mentioned salesmanship. I would say there's 3 skill sets to be able to make 7-figure income in a year. And that's salesmanship, number 1, right? You've got to be able to sell. And that's such a valuable skill set. I used to always say that's the most valuable skill set. I would actually say it's the second most valuable skill set. But the 3 skill sets, 1 is salesmanship. Number 2 is recruiting. The ability to attract talent, right, is huge, because salesmanship is addition. It's, you're adding. Recruiting is multiplication. You're multiplying your effect in your business. And the 3rd skill set is people development, or you call it leadership. And to me, leadership is the most important thing, man. Everything goes up or down as a leader from leadership. As a dad, as a father, as a husband, as a business person, as an entrepreneur, everything goes up or down from leadership. And I'd say that's the most valuable skill set.
What about marketing?
Great question. I think that's becoming more and more important. I've just never really focused on that because the companies I've worked with have great marketing machines. And so it's not really been a personal focus for me, but I do think that's becoming extremely relevant. And the more that we go online and social media and e-commerce, marketing is absolutely important.
Yeah, because if I have great salespeople and they can attract talent and there's awesome leadership, but nobody to talk to, they're not going to do very well. So I used to say the same thing pretty much. Sales and closing, that's the number 1 skill everyone has to have, because number 1, I was teaching it. Number 2, I made a lot with it. And I truly believe that is the most important, until I realized if you have, let's say, 1 kick-ass salesperson, closer, he's badass, versus 10 average salespeople, or an average salesperson. Let's keep it 1-to-1. You have a badass salesperson versus an average salesperson. This person talks to 10 people. This person talks to 100 people. The average person usually sells more than the great salesperson because of the volume of opportunities. So what causes that opportunity to happen is usually marketing. Could be referrals and hard work, but man, I'd add a 4th one to this, folks: marketing. If you master sales closing, you're very good at attracting and duplicating, and you have killer leadership skills, and you have marketing, dude, you're unstoppable. Literally. Would you agree?
I'd say, Brad, drop yourself a bomb, brother.
Yeah.
I agree with you.
Will do. So now you're let's say 30, and you say, screw it. Do you have money in the bank, a bunch of money in the bank?
So what actually happened there was I'd been talking about wanting financial freedom for a long time. And then there's a big difference between wanting something and being committed to it. Big difference.
Facts.
And so when I was 30 years old, it was on a Sunday. I remember it very clearly. I sat down for 4 hours and I said, okay, what does that actually mean? Like, how am I going to accomplish this financial freedom I've been talking about? And I shorted it down, man, made an entire blueprint. And, you know, the equation is actually really simple. The financial freedom equation, I'll share it with you real quick. It's, you know, on a spreadsheet, line number one is, you know, what's my current cost of living, you know, for your family? That's everything. It's your gas, rent, you know, cell phone payment, all of it. Then the next line item is, what's my current passive income? Maybe you have a duplex, maybe you have some stock, you know, dividend stocks, whatever that looks like. The next line item is, what's the gap? And the next line item is, how many years am I willing to commit to achieve financial freedom? And that kicks out a number. And, you know, as an example, let's say I needed $250,000 of passive income to have true financial freedom. And financial freedom means you have enough reoccurring passive income to cover your family's cost of living, right? Yeah. And so for me, what that came out to is I needed to have, you know, I reverse engineered the whole process. I needed to have 40 rental properties by age 40. And that would give me enough passive income for my family to have complete financial freedom. And so I wrote it down, you know, gave myself 10 years to accomplish that goal. I changed all my passwords to 40 by 40. You know, I put on my mirror, I internalized it every Sunday. I thought about it. I tracked it. I think just writing that kind of stuff down is really powerful, Brad. I think there's some statistic that you're 42% more likely to hit your goal simply by writing down the goal. I don't know how the hell they come up with that statistic, but, you know, they all say that 67% of all stats are made up on the spot. So I don't really know, but either way, you know, writing it down, what it does for me is it makes it so that I can actually track that and I can see the incremental improvements as I'm going, and I hold myself accountable by writing it down. But so I hit that goal when I was 36, a few years early, and then I was like, okay, that wasn't that hard, you know. So what's next? And it was, I wanted to have ownership in 1,000 doors by age 40. So I reverse engineered that process, and that's when I retired from Vivint and went full time into real estate. And I was able to hit that goal when I was 40. My goal now is to be at 10,000 rental properties by age 45. And so again,
that's a jump.
Yeah, it's a big jump. But you know, the truth is, once you've done it a few times, like, it actually becomes pretty simple, and it's just math. Like, real estate ultimately is just math. And even to this day, you know, we closed on some really, really big deals, including, you know, 400 unit apartment complex in Dallas. The most stressful real estate purchase ever was my first townhome, and then my first investment property with a fourplex. Still, like, more anxiety, more stress, everything. And it was just because I didn't really know what I was doing, right? I didn't have that confidence. And so, you know, I just say when people get started, well, first of all, I'd say get in the game. Like, there's two types of people in this world. There's spectators and there's participants. Be a participant. Get in the game. You're going to learn way faster that way than just watching the game be played. And so get in the game. Then make sure you have mentors, man. Make sure you're in a mastermind. Make sure you have, you know, good content. You have good education. And, you know, we live in the most amazing time where you can literally access everything via Google at the tips of your fingers.
So 1,000 to 10,000, dude, that's a jump in 5 years. How old are you now?
41.
So you got 4 more years.
Yeah, I'll get it.
Why 45? Why didn't you give yourself another 10?
Because that's, I'd say the law of big momentum. When you have momentum, everything's easier, right? And what I found personally is when I'm making forward progress, that's where I'm the most fulfilled. I'm the happiest. It's not about, you know, time off or vacations or any of that stuff. It's forward progress. And I really just lived my whole life around the idea of always basically living. Dave Allred lives his life on the fringe of my comfort zone, because I feel like that's where that's where development comes from, personal development, right? And so the idea of being comfortable or retiring actually scares the hell out of me. Like, I don't want that. That sounds terrible, man. The idea of retiring, that sounds like the worst. I hate the whole concept of that, right? And so I just want to make maximum impact. I really want to find the best version of myself. I hope that when I'm 50 years old, I look back at being 40 and be like, man, you were playing small. You could have been doing so much more than that. I hope that when I'm 90 years old looking back at 80, I'm like, Dave, you were playing small, man. You could have been doing so much more, because at the end of the day, it's all about mindset.
And it's fact that you could have. I just had this conversation with myself. Recently, I've been hitting the gym, getting in shape, getting all the freaking fat off me. I used to look in the mirror and be like, yeah, I look pretty damn good for my age, and and I'd rationalize. Then you see these people walking around that are just freaking ripped. I don't want to live like that. I don't want to eat like that. At the end of the day, man, it's living out of your comfort zone. And I look back and I'm like, I've been playing small, real small. People are like, wait a minute, dude, you're successful here. It doesn't matter. I could have been 10 times, 20 times. I could have already been in real estate. I could have had my own Axia partners. I know a lot of people. I can raise, I could make phone calls and probably raise $50 million. Well, why don't you? Well, because, I'm not real sure. It's like, it's all this bullshit where 10 years from now, I'll look back and say the same thing I just did, which is what you just said. We can play bigger. We need to play bigger. We need to think bigger. We need to act bigger. We need to be bigger. Because a lot of times people think, it's fake it till you make it. It's be before you become.
Yeah, I love that, man. That's awesome. Yeah, it really is. It's, good is the enemy of great, right? I think we look back, me and you both look back at our lives at certain points, like, man, I was so proud of what I was doing. I was crushing it. I was creating impact. We were winning. But, and that was true. But at the same time, if we would have been thinking bigger, 10x bigger, right, however you want to say that, we could have been doing so much more, right? And what's the most crazy thing to me in my life right now really is just the power of mindset and limiting beliefs. It's a real thing. Me growing up, if you asked me when I was a kid, as a teenager, like, what's the definition of having made it in business? It'd be, dude, maybe one day I can make $100,000. Like, best case scenario, if I play my cards right, like, I maybe could be able to do that, right? And, but you get around people, there's a lot of power in proximity. I think that's one of the best ways to be able to increase your mindset, is being around guys like you, being around guys that are playing big, right? And spending time flying around in a private jet with, these CEOs and billionaires. Like,
yeah, but how do you do that? If the average person's listening to this podcast, they're like, that's a great idea, but how do I get around millionaires and billionaires?
Great question. Yeah, it's a solid question.
Someone asked me that once. You know what my answer was? Become one.
Hey, there you go.
That's how you do it.
Attract instead of chase.
That's how I did it. Because someone asked me one time when I thought I was having a drink or I was being smart-assy, and they were asking questions, and he goes, dude, how do you get around all these influential people? How do you get into their circles? And I said, you become one. Because as soon as you become influential, other influential people come around, and you get indoors, and the proximity starts to, compound. And next thing you know, dude, you got a Rolodex that'll choke a horse, but you become one. So instead of figuring out, hey, how do I get around all these people? How do I become the person that all these people want to be around? And you hit it on the head in the beginning, which is add value.
Yeah.
And you got to be clever.
That's what I was going to say. Let's say add value. Like, figure out a way to, how can I create value for this person, right? And everybody's going to try to create value, but how can I create authentic, true value for this person? And they're going to appreciate that, right? And that's going to give you some proximity, and then you got to keep on working on that and go from there.
Yeah. So, for example, people are listening to this. They know a couple deals hidden somewhere. They reach out to Axia Partners. Hey, Dave, I got a deal here, and here. Boom! It turns out to be a damn good deal. And then he calls again. Next thing you know, you're like, hey, well, come over to the house. We're doing this, and then next thing you know, y'all are buddies. That's how it happens. Go find a property. Axia Partners are looking for investments. They're looking for deals. Go find some properties. Go throw them the lead. Well, what if they don't pay me? Again, here's what I tell people. You have to, if you want to raise at your job, you don't wait for them to pay you more to start doing more. If you want to raise, you start doing more, and then you'll get paid more. Well, what if they don't? That's a limited, scarcity-based mindset. So there's an example, folks. If you're wondering, what does he mean? Well, go find them deals. What else are you looking for? How can the Bomb Squad help Dave Allred?
Opportunities like that. We're actively hunting right now for deals across the country. Obviously, we're looking to raise a lot of capital in the future. We're going to be launching multiple funds going forward, We built out an incredible team. I'm really proud of the foundation that's been built right now. I think our investment thesis is very unique, and it's very appropriate for where we're at in the markets right now, all the volatility that we see right now. I mean, a lot of people are just scared, man. Like they're literally they've lost a lot of money in cryptocurrency, in the stock market, in their retirement accounts, and they want a safe haven. They want-stability, right? But still to be able to make a profit, right?
What's crypto at right now?
It's down a lot. It's down. I mean, Bitcoin's at 28, and Ethereum's down to $1,740 as of this morning.
Wow.
I love that space. I mean, for the record, not to go off on a tangent here, but I think that's a really promising space, and I'm actually investing more and more into that space. I'm in the metaverse, NFTs. In fact, Axia is looking at, in the future, running a fund that's a tokenized multifamily fund, or where we sell NFTs, and they get access to, the NFTs. Basically, we use that capital and go and purchase cash flowing property. But without going too far down that rabbit hole, I love that space. The key that I would share though is, when people ask me all the time, like, well, Dave, how much should I put into cryptocurrency? Two things. One is it is gambling. It's not really investing in the way I look at it. It's more speculative, right? Anytime you put your principal at risk, I call that more of a speculation than an actual investment. But love the space. It's such a fun space, man. The way I look at that is it's just about a diversified allocation. And so whether you have $100,000 to invest or $100 million to invest, the way I approach that is you want to take the emotion out of the decision, because the higher the emotion, the lower the intelligence. Again, the higher the emotion, the lower the intelligence. So I want to remove all the emotion from my investing decisions. And so for me, I say, okay, I want 1% of my total investable, money into cash, 1% into precious metals, gold and silver, 5% into blockchain, cryptocurrency, 5% into hard money loans with flippers, 10% into the stock market, 15% goes into private equity deals, 25% into residential real estate, and 33% into commercial real estate. And I'm not exact with those, but it's pretty damn close. And the reason why I like that, Brad, is because I'm not smart enough to figure out when the markets are going to tank. Everything's cyclical. And I think it's a fool's errand to try to time the markets. Instead, it's an all-weather portfolio where it's diversified, and I sleep good at night knowing, hey, you know what? Some things might crash, some things might go up, but at the end of the day, across the board, we're getting cash flow, and it's diversified, and we should win over the long term.
Well, I appreciate you coming in, sharing this stuff, folks. If you guys ain't following Dave, I think you should be. Are you dropping shit on your social media, like tips, tricks?
I've never done a lot in the past with that, but I'm definitely trying to. As you mentioned earlier, marketing is super important. So I'm starting to get into that a lot more. Social media, Instagram, I'm probably most active on there. And if anybody wants to reach out, feel free to shoot me a DM, and I'll do my best to personally respond.
What if they have questions with real estate? Is that cool?
Yeah.
Got
absolutely.
deals? Hit you up?
Yeah, absolutely. Reach out. Any way I can create value for your listener base, feel free to reach out.
And folks, Axia Partners, they're not messing around. Like they got some capital to throw around. They got some experience. Everything they touch seems to turn to gold. They do. Do you do masterminds or events?
We do a lot. Well, once a month we have an experiential webinar, right, where we just privately for our investors, our partners. We also, once a year, we're looking at doing experiential getaways. Like we'll actually take all of our partners off site and then just go teach all things real estate. A lot of us, Kent and a few of the partners have masterminds. I speak at masterminds monthly, but we don't have an actual Axia mastermind. I would actually say that the commitment to experiential investing is basically like a mastermind. So our partners get access to basically a free mastermind by investing in the fund. And so not only do they get an ROI, return on investment, they also get an ROE, a return on experience, or return on education, like a mastermind, without having to pay for the actual mastermind.
Folks, you heard it. Go follow Dave Allred at Dave Allred or Axia, AXIA partners.com. Appreciate you coming in. As always, till next time, keep it real.
Dropping bombs with the real Bradley. Subscribe now.